Hello and good evening, all Maryland home buyers. Thank you so much for being here. My name is Kelly Beard, content specialist for Maryland Realtors, and welcome to our home buying keys webinar. Assembled tonight, we have experts in Maryland real estate, including expert realtors, lenders, and a lead representative of Maryland Department of Housing, and our very own Director of Advocacy and Public Policy. Tonight, you will get a plethora of information to help you navigate and succeed in your home buying journey. We encourage your questions and we look forward to answering them. So please post all your questions in the Q&A box below. And with that, I will turn it over to our Director of Advocacy and Public Policy, Lisa May. Lisa, take it away.
Great, Kelly, thank you so much. And thank you, everyone. We know that the air is a little thick in the Maryland state tonight. So if you have to be inside, we're really, really glad that you have chosen to spend it with us. I am Lisa May. I am the Maryland Realtors Director of Advocacy and Public Policy, and welcome to Your Home Buying Keys. This is a monthly webinar series that we host free of charge for anyone who is interested in one day becoming a Maryland homeowner. Before I hand it over to our expert panel tonight, I did just want to share some very exciting information that we have, and you guys are among the first to hear about it. I'm going to share my screen just really briefly here to talk about our brand new Maryland home ownership website. And you can find it at marylandhomeownership.com. If you need information on homeownership outside of one of these webinars, or if you had something that we didn't address tonight, you can go to marylandhomeownership.com and find a wealth of information about buying a home, selling a home, or owning a home. We also have some very cool buyer and seller toolkits that walk you step by step through the process that you can download for free. And you can actually see right here on this homepage that we are advertising the Welcome Home Showcase. This is a free event that will take place in Prince George's County at the Wayne Curry Sports and Learning Complex. That will take place next Saturday, June 17th from 9 a.m. to 3 p.m. There are going to be workshops, there are going to be vendors, a lot of information for you as you begin your home buying journey. Maryland Homeownership, Maryland Realtors will have a booth there. So if you're able to attend, please stop by, say hello, ask us any questions that you have, and we hope that you will in fact attend that event. All right, I've stopped sharing so that we can hand it over to our experts tonight. And first up is Darnell Davis. Darnell is a realtor with Sachs Realty in Cockeysville, Maryland, but he works all throughout the Baltimore region and has a lot of experience working with first-time home buyers just like you. So Darnell, thank you so much for being here tonight. And why don't you start us off with home buying from the realtor perspective?
Well, thank you, Lisa. And hello, everyone. I really want to thank you guys for spending and taking time out your busy schedules to hear us speak this evening. And so what I would like to do is just jump right into it. So let me share my screen. And okay, I think that's it. Let me minimize that. And I guess we're ready. Okay, so your first home. This is home buying by the book, okay? So today, the overview. Today, we'll talk about some common fears and helpful facts about buying a home. We'll also discuss 8 simple steps to successful home ownership. Fears and facts about buying a home. Okay, we're going to start with fear to the left and go with fears and facts to the right. Fear. Actually, you can't afford to buy a home right now. Fact, you can't afford not to buy a home right now. Fear, I should wait until the real estate market gets better. Fact, there is never a wrong time to buy the right home. Fear, I don't have any money for down payment. Fact, There are a variety of down payment options available to you. Fear. Hold up, I gotta move my thing over. Fear, I can't afford to buy my dream home. Fact, the best way to get closer to buying your dream home is to buy your first home. I gotta get this out the way. So 8 steps to home ownership. 1, decide to buy. 2nd, hire your agent. 3rd, secure financing. 4, find your home. 5, make an offer. 6, perform due diligence. 7, close. And finally, 8, protect your investment. So buying your first home is an emotional decision. Anyone sitting here on this panel will tell you that it is. And it really, really is. Because home is where the heart is. A home represents your personal taste and provides a stability and security for both you and your loved ones. And it also provides pride of home ownership because it's yours. So next step, decide to buy. It's also a rational decision. As they say, home is where the wealth is. Grow wealth via equity buildup, debt pay down, and value appreciation. In the United States, you can take advantage of tax deductible benefits such as property and mortgage interest write-offs. A home is an accidental investment that creates leverage opportunities. Examples, in a few years, you can use your equity to trade up to a better home, or you might consider using some of your home equity to invest in a rental property or a second home. So the next step is to hire your agent. This is a very important step, and because you have to set mutual expectations in writing between you and your agent with a buyer representation agreement that commits your agent to get you into the home you want. Agency is a very important thing. I'm going to go off track a little bit here. In Maryland, that if there's not an agency agreement, just understand that until we have that agreement, I represent the seller. And so it's very important for you to get that agency agreement with your agent. So therefore, their fiduciary obligation is to you and you only. Okay, and so once that's established, just understand that a real estate agent performs 7 main roles. First is to educate you about the market. Second is to analyze your wants and needs. We listen to you and we want to know everything that's important and real. Next, we steer you to homes that fit your criteria. Fourth, we coordinate the work of other needed professionals. This is in terms of your home inspectors, your title personnel, your lenders, your stagers, anything you need, we're here to act as the project manager for you. We also negotiate on your behalf. That is our job, to come up with the best price between you and the seller. We review paperwork and deadlines. We make sure that everything goes on time, but just be aware that sometimes things outside of the course of business can mess things up, but that's our job to protect you from those things. And sort of like the final one, to resolve any problems that may arise. Secure financing, that's the next big step. And so 6 steps to financing a home from the home buyer's perspective. First, you want to choose a loan officer or a mortgage specialist. Second, you want to make a loan application and get pre-approved. Third, determine what you want to pay and select a loan option. Fourth, submit to the lender an accepted purchase offer agreement. 5, you get an appraisal and a title commitment. And 6, you obtain funding at closing. You also want to know your mortgage options. You have down payment, you have your interest rate, and you also have term. These are things that are going to be factored in to your monthly payment. Understanding monthly payments, just understand that you have principal, interest, taxes, and insurance. Together, these four elements are commonly referred to as PITI. So there's two sides to the pre or to the funding equation of securing financing. You have pre-qualification versus pre-approval. And I'm going to briefly touch over this, and the lender that will follow me would get into the weeds with you. But for a pre-qualification, is simply a rough estimate of how much you can borrow. Pre-approval, on the other hand, involves a formal application process and provides you with a formal commitment from a lender stating how much you can borrow and at what rate. And you can decide among your mortgage options if you want. A low monthly payment means that you just put more money down or purchase a more affordable home. Second, a low down payment. A form of that is to secure a second mortgage or an 80-15-5 piggyback. Third, to build equity quickly, make voluntary prepayments. And finally, to minimize risk, take a 30-year fixed rate program with 20% down. And that also should help you with your PMI. And that's your private mortgage insurance, but I'll let the lender speak further on that shortly. So when securing financing, there's the suitcase principle. Your lender decides what you can borrow, but you decide what you can afford. In your pre-approval letter, make sure that the monthly payment is an amount you're comfortable paying each month. It's best to spend no more than a third of your gross monthly income on your home payment. And every lender has a different value in determining your DTI, your debt to income ratio, but just make sure that you go over that very carefully with your lender. Find your home. When viewing a home, what you consider and what your agent considers are different. You'll want to look for layout, space, a sense of value, convenience of location to work, schools, features, and other amenities. Whereas your agent will look for how the home compares in terms of size, layout, value to other homes in the area, as well as maintenance and structural concerns. 3 components of an offer. 1, price. Offer must reflect the true market value of a home. 2, terms. 6 basic categories address timing and financial considerations. Contingencies, often referred to as conditions that allow you to opt out of a deal if the home has a problem. And problems can be anything from home inspections to funding, to just life events, as they may call it. So there's always opportunities for you to get removed from the contract, but these are those types of contingencies. Next, you want to perform due diligence, and that is in the form of a property inspection. Once you're under contract, the first thing you're going to do is schedule a home inspection. And the purpose of a home inspection is it exposes any structural or hidden structures. Homeowners insurance policy protects against loss or damage for the structure, but you also can get a home warranty, which will help protect the mechanical systems that also are included in your home. But in your inspection, it's the big stuff that really matters. Cracks are crumbling in the foundation, cracks inside the house over windows, which is a sign of settling, water stains on ceilings, floors or walls. That could be a bad roof or bad plumbing. You have faded or worn shingles, which also leads to water damage. And then with water damage, you also have the issue of mold. And that's definitely something that needs to be remediated. And then the next step, after all of that's gone through, you have your closing. Pre-closing responsibilities include appraisal, survey, title search, and title insurance, keeping yourself mortgage worthy. during a final walkthrough of the home is paramount because that is your last chance to see the home prior to the signing of all documentation. And countdown to closing includes getting your settlement statement, your certified funds, evidence of insurance, and transfer of clear title. Next, after you have your home, protect your investment. 2 keys to good home habits: keep it clean. Perform routine maintenance on your home systems, depending on their age and style. Second, keep an eye on it. Watch for signs of leaks, damage, and wear. Fixing small problems early can save you big money later. Tip: keep a file of receipts for all your repairs. And thank you, Lisa. Hope you guys enjoyed it. Thank you.
I did enjoy it, Darnell. Thank you so much. And I hope you guys did too. Now, we do have our Q&A window open. Don't be shy because we have these experts here for you tonight and we will answer your questions. But, you know, Darnell, maybe I'll start off with one, and maybe it's a common misconception. You had on your list that you talk to a realtor, you talk to a lender, you get your financing before you find the house. Now, why is that important? Because a lot of people would think, oh, I find the house, then I do all of those things.
I will give you, and I will keep it short. My daughter, I will use my own child. She was living in an apartment. She was paying a certain amount of money, a substantial amount of money. And she was like, well, if I'm paying this amount for an apartment, I can afford a home. And so we just start looking at homes. And this is before I got into real estate, so I'll leave it at that. But we started looking at homes and she fell in love with this house. It was beautiful. Then she went to her lender. That's when she got the bad news, because now all of a sudden the criteria for renting is quite different than it is for buying a home. And so they took into account her debt to income ratio. And she found out that she didn't qualify for the home, although she had the job, although she had, she was already paying that set amount, But the key thing is that lenders and I want to make sure that you can afford the home before we even show it to you, because it's nothing like going out and falling in love with a pair of those red bottoms and then you realize you can't pay for them. You know? And so that's why we really try to get you pre-qualified and pre-approved. So therefore, that when we show you a property, that allows us to show you properties that are within your comfortable price point, and ergo that when you put an offer in on it, it's going to be a strong offer because it's already pre-approved and your offer wants to be more attractive than the next person's, but yet you know that you're going to be in a home that you can afford. And it's not and for me as a realtor, I not only want you to buy a home, but I want you to stay in that home.
Great. And thank you, Darnell's daughter, for serving as our example here tonight. We appreciate that. Yeah. You also mentioned on your slides, inspections, property inspections, and there's been a whole lot in the media about people, waiving those inspections to get their offer accepted. Now, what is the danger? What's the downside of waiving those types of inspections in your offer?
I believe that the danger is, unless you're just Bob Vila or you're Norm Abrams from This Old House and you just are a handy person, there can be structural. A lot of the purpose of a home inspection is for safety and structure. These are items that at some point can cause a danger or a hazard to you and your family. It could be anything from a bad flue coming off your hot water heater, and now all of a sudden you have exhaust gases coming back into the home. It could be that the foundation is bad. You can have rot with pests and termites, with like animals or wood destroying insects, mold. There's so many things that a trained eye is looking for that you don't recognize immediately. And buying a home for the average American, the largest purchase you'll make in your life is your home. You want to do your due diligence. The past couple of years was a crazy market, and I don't know how people got away with it, but I'd strongly recommend that you get a home warranty and a home inspection when you purchase your home. I would never forego. I've never instructed my clients to forego a home inspection personally.
Great. And now you guys, I hope you see, like, when you have a good realtor working on your side, that's the type of advice that you get. But Darnell, you're one of about 30,000 realtors who are currently in Maryland. And you know, some of the folks out there tonight may be saying, how do I go about picking the right realtor to represent me? Where would you recommend that they kind of start, or what are the things that they should be looking for in their right realtor?
Okay, well, first of all, most realtors would tell you that referrals is the bread and butter of our industry. That if I take someone that you trust, you love, you respect, and I do right by them, hopefully they'll refer me to you or you to me, and therefore they're looking out for your interests as well as I will be looking out for your interests. But basically, you just want to make sure that it's a two-way street. I'm going to try to get your business because I enjoy doing what I do, but you're also interviewing me because it really comes down to a fit. Because sometimes personality-wise, sometimes scheduling-wise, sometimes just a feeling you get. And you know that when you're working with someone who really cares about you and is willing to work hard for you. And so just understand that you definitely want to look into certain websites that they have that where like you can get ratings for realtors. But I strongly suggest that just ask around and you'll meet or get referred to someone that has a reputation for being service oriented and having a good connection with you. Because trust me, you do not want to be with a realtor that you don't like. And because, as Lisa said, there's 30,000 of us. You have choices. So the first one you come across, you don't have to stay with if they just don't fit your model correctly.
Excellent advice. Well, Darnell, thank you. Darnell's going to stick around throughout our program. So if you think of any questions, you know, in the next couple minutes or so that would be great for Darnell to answer, please go ahead and put those in the Q&A. We'll circle back. But now to keep us moving, I'm going to hand this over to our lender panelist, Amy Wolf. Amy is with Direct Mortgage Loans. And I think it's fair to say that Amy is an award-winning lender. She is one of the top Maryland mortgage program lenders in the entire state of Maryland. And so we're really thrilled to have her here tonight. Amy, I will let you take the floor. Oh, but you are muted. Yep.
I'm off on mute. Woohoo! Finally. Okay, can everybody hear me now? Are we good? All right, awesome. All right, well, so my name's Amy Wolf. I've been a loan officer for 20 plus years at this point. And when I had to try to pop over to unmute myself, I lost my share screen. So I'm going to go ahead and click that button real quick as well. And then I'll go ahead and get this shared back with everybody. And bear with me one hot second, and there we go. And share. Okay, so once again, my name's Amy Wolf. I've been a mortgage banker for almost 20 years now. I have extensive history in real estate, done just about everything except for what Darnell does, right? I've never been a real estate agent. I stay in my lane for that. But I've had a lot of experience as a mortgage banker, investor. I had up to 15 rental properties at one point. I flipped houses, had a property tax business where we were appealing people's property taxes. So just a wealth of knowledge in regards to mortgages. I always tell people I've done everything wrong at one point in my life. And so now I finally have figured out how to do it right. And so you don't have to make the same mistakes as you're going through this that I've kind of made over some time. I do have a master's in social work, and previously I was a social worker working with disabled adults and children. And so a lot of the Maryland Mortgage Program and the way that they assist people into becoming or making their goal of homeownership a reality is near and dear to my heart. I do work on a team. As you see, it's the Amy Wolf team at Direct Mortgage Loans. We have 10 people on our team. One of our people is actually a down payment assistance specialist. And, you know, we really strive to make sure that we're we're available. We're giving you education, hand-holding, and making sure that you really understand exactly what's going on and making good decisions for you and your family. Darnell gave us a pretty good overview already of the basics of mortgages, and I'm just going to touch base on some of the things I think might be important to you. If there's anything that I don't go over, just throw it in the chat. I'll be glad to answer any questions that you have. Okay, so this is basically the timeline of the home buying process, right? You got a pre-qual, then you go to pre-approval, and then you're out shopping, you make an offer, you complete your loan application, another loan application, the official loan application, if you will, then a home inspection, then we take your file to processing, to underwriting, to final underwriting, to closing. And so when you look at that, it's a long, windy road. You don't have to worry about all of the stuff that's on there, right? That's our job. Our job is to handhold you, walk you through it, and as you're in it, you know, to make sure that you're getting through each stage successfully. Before you begin your search, and they touched a little bit about this, but the most important thing is going through the pre-approval process, right? We want to make sure that we're finding the right mortgage for you, and we also want to make sure that you know how much you're pre-approved for. There's nothing worse than going out there, finding a house you fall in love with, and then finding out that you're looking in the wrong price point, kind of like what happened with Darnell's daughter. How do you get started? What's the process? And this process is very easy. And a lot of times we have people who are like, oh, I'm not ready. I don't want, you know, I'm not ready to do it quite yet. Keep in mind that this is all a discovery process. And so a lot of times I'll say knowledge is power. All right. There's no cost to apply. We have a lot of information we can share with you. And sometimes I talk with people and get their initial application. They're thinking of buying, you know, a year, 2 years, or 3 years from now. Sometimes I'm talking with someone who is trying to go out and this weekend and purchase a home. So we are on your timeline and we're here to help you get there. The application process in general, we're going to gather information about your income, your assets, your credit, your goals, the timeline, your timeline and your plan. And what you hear in all of that, it's all about you, okay? It doesn't matter what, you know, mom thinks you should do, dad thinks you should do, whatever. It's all about you and what you're trying to work towards. Documentation, we're talking about gathering your documents. So we're telling a story with paperwork when you apply for a loan. And so this is just a list of generic documents, right? Photo ID, which is basically a driver's license, right? 2 years of tax returns, 2 years of W-2s or 1099s, last 2 pay stubs, and 2 months of bank statements. That's a general basis for us to get started. But once again, if in your process, maybe you had a previous bankruptcy, or maybe you are divorced, or you have child support, that list could grow based on your particular situation. So what we're looking to do is we're looking to try and answer some questions. And the number one most important thing to us is, what is a comfortable monthly payment? All right, so a lot of times people are like, well, what's the max I can be approved for? I can tell you that all day. But if you're not comfortable with the payment, it doesn't really matter, because you're the one who's going to make that payment, right? So we're going to do both. We're going to approve you for the max, but we're also going to approve you for what your comfortable payment is. Where are you looking to purchase a home? Why is that important? Well, each area is going to have different programs. We're lucky enough that the Maryland Mortgage Program encompasses the entire state of Maryland, but each county also has additional programs that sometimes we can layer with the Maryland Mortgage Program. You know, you might be looking in 2 or 3 counties. It might just change the programs that are eligible, income levels and different things like that change county to county. Once again, all those specifics are our job to be the expert on. You just have to let us know what your goals are and what you're going to actually be trying to do. What are you looking for in a home? You know, your real estate agent's going to get a lot deeper on this, but we also want to have an idea. What are you looking for? You know, are you looking for a single family home? Do you need a yard? Do you have to be in a certain school district? And the reason that we care about that is we want to make sure that when we're looking to pre-approve you, that we are pre-approving you for something that's realistic. Yeah, I had an application I took earlier today, and we're like, okay, well, we finally can pre-approve you, but we can pre-approve you for $150,000. And in And I happen to be standing right now in Frederick, Maryland. And in Frederick, Maryland, it's very hard to find a home in that price range. So we had to have the conversation is, are you willing to go into other areas, or should we be looking at a cosigner or ways to maybe eliminate some debt so we can increase your approval? What is your current housing payment? This is one of my favorite things, right? Is what are you currently paying in rent? So a lot of times somebody will say, I'm currently paying $1,500 a month in rent. I think I can afford $2,000 a month on my mortgage payment. Okay, cool, that's awesome. So I like to tell people to do what I call practicing your payment. Okay, so if you're paying $1,500 now and you think you can pay up to $2,000 a month, I'll let you know what your max is. But start practicing that and see if that's actually going to work in your current situation. Okay, how do you practice that payment? Just take that extra $500 a month, either put it in a savings account or throw it to any debt that you have to eliminate that debt in a very quick fashion. If you're renting, when does your lease expire? That's important to us because sometimes there could be fees to break a lease. We want to know what they were working towards. A lot of times people will say, well, I'm in a lease for the next 2 years, and it makes them a little bit nervous. Keep in mind that sometimes we can break a lease. As a landlord, I know that if you reach out and you have a conversation with your landlord and you're helping them to find the right tenant, that there are ways to get around just about everything. What is the source of your down payment funds, right? So we're looking at, do you have a bunch of cash sitting around? Is mom, dad, somebody giving you a gift? Do we need to use one of these down payment assistance programs like the Maryland Mortgage Program or some other county program? And so, we just want to have an idea of what you have there. And then also, what is your time frame to purchase a home, right? Like I said, some people will come in, they'll apply with us, we get them pre-approved. Another question I get all the time is, how long does it take to pre-approve somebody? It can happen fast, right? I always say it's based off of you, okay? So when you come in, you give us the application, we send you that list of documents. If you get that list of documents back to us, that same day or the very next day, we could have you fully pre-approved in as short as 24 hours or 48 hours. So it can happen very quickly if you need it to happen very quickly. Any questions about that section? If you have any, just throw it in the chat and somebody will let me know. So the next thing is just credit, and credit is so important when you're applying for a loan. And so I always like to give credit tips as we're going through the process and teach everybody a little bit about credit in general. So the first thing is, what can improve your credit scores, right? So credit card balances have the biggest impact on our credit score. All right. And so you'll go, if you've ever been to any other classes, a lot of times they'll say, it's a good idea to keep your credit cards under 30%. My rule of thumb for everybody I talk to is 10%. So if you have $1,000 available on your credit card, we want you to try and keep that balance at $100 or less. And the school of thought here is that how the credit card company or credit company looks at it is, how much money do you have access to that you're not using? And when you're not using that money, your score is going to escalate up, okay? And so the lower you can keep it, the better. A lot of people believe that you have to use it and then pay it off each month. That's not even the case. A lot of times we suggest to people to do what we call playing the gas game. So it's fill up your gas tank once, maybe you're putting $50 on it, then pay it the minimum, pay the minimum, pay the minimum. Once it's paid in full, then repeat that again. Making sure you pay your bills on time. This is the biggest one. One late payment. One time that you're over 30 days late can drop your score over 100 points. I've seen it time in, time again. When you open your bill, make the payment, right? Get it in, keep your obligation there. Don't apply for any new credit. So when we're in this process, we don't want you to be running out and buying a car or applying for new credit cards. We want to make sure that we're keeping the inquiries to a minimum. And also, any debts that you have, we're already taking those into account. Now, obviously, if something comes up, you have to buy a new car, your car breaks down and you have another choice, call us first, let us know what's going on, and we'll let you know the impact that could have. And then also just be patient. Keep in mind that credit building takes time. I always equate it to like dieting, right? We got to put some hard work in to actually get to where we want to be. All right. What can hurt your credit score? We kind of mentioned those: late pays, opening new credit, paying off installment loans. I'll touch on that for a hot second. So credit cards are considered revolving credit. Installment loans are like your car loans or your student loans. And why would paying off one of those possibly hurt your credit? Well, the second that you pay it off, you stop getting that good reporting that you've been paying it on time. Okay. So when you hit the zero balance, it almost disappears and you don't have that coming for you. Now, if you're regularly just paying it off and it's time for it, as long as you have other debts there as well, that is okay. But sometimes people will try to pay everything off before they apply with us. Not a good idea. Come apply and let us give you some advice. Co-signing for debts, this is the biggest one. This is the death of all loan approvals, right? Don't co-sign for anybody. My brother asked me to co-sign. He said no, right? Then he asked my mom, and my mom said no because I told her to say no. But if you ever decide to co-sign for someone, you have to understand what you're saying is in the event that they do not make their payment, you are going to make it, which means you also have to mark your calendar, call the creditor on the 27th, 28th of each month. And if they haven't made the payment, you have to make it for them. Okay, so co-signing is serious business. Collections can hurt our credit. So if you ever get a note in the mail saying something's going to collections, hopefully we're not getting it that far. Call, talk to them, get on a payment plan, anything you can do to avoid that. And then also closing accounts is never a good idea. Sometimes, well, actually one time we had somebody who sold their house, moved in with their parents for a little while, paid off all their debts, and they were so excited. They called me 90 days later. I pulled credit and they had none because they had closed every account that they had. So it's important to have access to credit, but not to overuse it or abuse it. Right? If you don't have the greatest credit, how do you rebuild it? Get a secure credit card's a good idea. Use your support system. If you can talk someone into co-signing for you, cool. If you can talk them into being added as an authorized user, that could help you as well. You also could apply for a secured loan at your bank. Maybe they lend you $500, and that can start for you to be able to build that credit. Once again, even if you have no credit or bad credit, you can always reach out to a loan officer like myself. We'll be glad to take that application and give you actual suggestions to get you where you need to be. Okay, so if anybody has questions about credit, this is usually a hot topic, but I'm going to keep moving on, but like just stop me if anybody throws anything in the chat and I will answer those. All right, next thing I have is pros and cons. Why should I buy now? Oh my gosh, the interest rates are so high, right? Well, who cares? That's the only con that's out there, all right? And I get this question all the time. Should I buy now? Should I buy now? And yes, rates were in the twos. It was crazy. It was a once in a lifetime thing, right? And yes, now they're about in the sevens-ish or sixes to eights, you know, depending on programs. The thing is that the rate doesn't matter. All that matters is the monthly payment, right? If you can afford the monthly payment this higher rate, if and when rates drop, we refinance you, you're in a better position. It's all about your current budget. The pros of buying now, you know, is that right now, well, sometimes we can get a seller to help pay closing costs. They have seller paid rate down, buy downs. It is a competitive market right now. So in order to get seller paid anything, we have to increase the purchase price, but things aren't moving as quick as they were. So I'd say about half of our deals right now are getting some sort of help from the seller. Now that's going to depend on your area and how crazy, you know, things are going, but we can ask sellers to help pay for things for you. It gives us time to get a home inspection, as Darnell was talking about. It gets us time to actually get an appraisal. We don't have to waive the contingency necessarily, although it does strengthen offers in the right scenarios. And so really there's lots of benefits to buying right now. So another question I get is like, as a loan officer, how can I help you with getting your offer accepted, right? What's the difference? Like, why do I want to go to my bank or come to the Amy Wolf team here at Direct Mortgage Loans. So some of the things that we do that are a little bit different, one is every time you put an offer in, we're going to call the listing agent. We're going to talk to them about how strong your offer is, how much work we've done on the front end to get you to where you are and to make sure you're approved. We also have a loan commitment at pre-approval, and this is huge. So what this means is, you know, sometimes people go on Rocket Mortgage and they'll say to me, oh, I'm pre-approved. Well, if you didn't send your documents in, you're pre-qualified, right? And pre-qualified means based off of what you said, you're pre-approved, right? Or pre-qualified is actually what it's called. Once we get your documents in, you know, you may have had, I don't know, some garnishment on your pay stub, or you may have had large deposits in your bank statement, or you may have tax returns that maybe you wrote off something on your tax returns that gives you lower income, or you have commission income or overtime. There's a million different things that can happen because of the paperwork. What we do is we're going to go through all of that paperwork. We're going to teach you about the paperwork. And then once we have you to where we have you pre-approved, we're going to take it a step further and go all the way through underwriting. Underwriting, once the underwriter signs off and agrees on everything that we've structured for you, that's when we get what's called a loan commitment. And so when your real estate agent is submitting an offer, your offer is much stronger if you have attached to it a commitment saying everything's 100% done. The only thing that's out there floating around at this point is a title and appraisal. Okay, there's nothing else that needs to be there. We also can close quickly, right? And in today's market, how do you beat out somebody else? Well, giving them the opportunity to close on 15 days. If we're using DPA, stands for down payment assistance. If we're using the Maryland Mortgage Program or a different county program, we usually ask for 25 days. Now that's really quick. You know, you'll hear some people say they need 45 days or 30 days. The reason that we can move so quickly is because of the team that I have behind me supporting me. And that allows us to get things done quickly. All right. Some quick common mortgage myths I'm just going to go over. One is you need perfect credit to buy a home. This is not the case, right? You could have as low as a 580. You could even have lower than a 580. Okay. We prefer you to have a 640 or higher, right? And so for the majority of the Maryland mortgage programs and to get some down payment assistance, we need you to be a little bit on the higher side. But you don't have to have perfect credit, right? You don't need that 700 or 800 score. And the other thing to keep in mind is that we have credit specialists on our team, and we're here to help you, right? The social worker in me, I can't help myself. If you seriously want to buy a home and that is your goal, I am going to make the plan for you. I'm going to check in with you. Well, my team's going to check in with you on a regular basis, and we're going to help you get there. Can't do it for you, but if you're going to do the hard work, we'll be there to support you. Another myth we talked about briefly was find a home and then worry about financing. Oh, no, please do not do that. There's nothing you can do worse than that, although it does happen sometimes. But, you know, really, we want to get the financing. We want you to understand, know your budget, know what you're going to be paying. We have calculators where you can, you know what your payment is, even before your real estate agent takes you out to see a home. And so we really want to empower you to be educated. Your debt will prevent you from getting a mortgage. Not true, right? You're allowed to have debt and still get a mortgage. Okay. And so it just goes into your debt to income ratio. And so you might qualify for a little bit less because you have a certain debt that you're carrying. And then we have making large purchases before closing will not affect your home buying process. Absolutely, it can affect your home buying process. I had somebody approved. We were 2 days from closing. He pulled up in his brand new BMW, and I was like, please tell me that's not yours. And well, those dealer tags on there, it was his. And well, I told him now he better move into his car because the house isn't happening at this point, right? So we're here to guide you before you make any big decisions. You want to talk to your loan officer. We do have a phone app in here. I always like to talk about that because our app has a lot of cool features on it where you can apply, run your own numbers. And so we'll make sure that we get this PowerPoint out to everybody so that if you guys are interested in having this tool to play around with, once again, we're on your timeline. So whether you want to buy now or years from now, that's fine. Mortgage programs, lots of different mortgage programs out there. Once again, you do not need to know the specifics of them. That is our job. You do not need 20% down to purchase a home. FHA, you can put as little as 3.5% down. Conventional, if you're a first-time buyer, 3% down. 5% if you're not. If you're a veteran, 0% down. If you're buying in a USDA eligible area, which is a rural area, 0% down. So there's lots of different programs out there that can assist you. And then even that down payment can be covered by some of the down payment assistance programs. There are closing costs involved. In general, I always tell people, if you're buying between 100 and 200, figure on around 6% in closing costs. 200 to 300, 5%. 300 to 400, 4%. 400,000 home or higher, figure closer to 3%. The reason that number goes up is that a lot of the costs are fixed costs, right? The appraisal costs a certain amount, the credit reports cost a certain amount, and as you're buying a bigger home, then that could reduce. And then, also to cover closing costs, we can get seller closing help, gifts, 401k loan, or down payment assistance. So just to recap real quick, all you got to do to get started is apply. We do a credit check for you that is free. We actually, once somebody first calls us, we do a pre-qual, a soft pull credit, so it doesn't even hit your credit, just so we can start doing some planning. Then we come up with your personal plan. And I'm telling you, all you got to do is to get started is just apply. Don't be scared. Knowledge is power. And well, that's the information. And then, so once you're approved, what do you do then? Well, that's when you go find that house, right? And that's when you make home ownership a reality for you all. Okay. So that's about all that I have, unless anybody has any questions. And we're always here to answer any questions you guys have.
Well, Amy, thank you so much. And we did have one question come in. You touched on it a little bit.
Sure.
And I'm just going to check in with you briefly because Catherine is still left with a lot of other really great mortgage programs that I know you want to hear about.
Yeah.
But why are we still doing pre-qualification when it's pre-approval that is really the thing that matters?
So we don't really do a pre-qualification. The reason some places do it is because they work in a fashion of as many people as we can. And if some of them fall apart, who cares, right? We only do pre-approvals, right? And so, we really want to dive in and actually get all that from you.
Great. And then we had one question to circle back to Darnell for a moment. If someone is looking to buy at the end of the year, say in December, when should they start this process? Oh, you're muted.
Okay, I apologize. I personally would like to say that all year round is a great time to buy. That when I have listings, a lot of agents don't like to list in the wintertime because they feel that the foot traffic isn't there. I truly believe that I love to list in the wintertime because if you're serious about buying a home, you're going to brave the cold. And the good thing is that you're not a looky-loo. I hate to use that word, but you're not a looky-loo. You're serious about buying a home. And so for the seller, it's a great opportunity because you know that the people to come and look at your property is serious about the process. And you as the buyer, this is a chance for you to not have to deal with all the spring and fall traffic that's coming. So you have less competition when looking at homes. And so you have a better chance of not getting into a multiple offer situation. And so for me, the wintertime, I love it. I think it's an ideal time and you should start as soon as you get pre-approved.
Great. So you could even start now if you wanted
Start
to.
now.
Yeah, I would always say that you should start immediately. If you're thinking about it, knowledge is power.
Yep.
Your pre-approval technically doesn't expire. It's a living, breathing document. And so, yeah, get it started so you know what your options are.
Great. Thank you both. Well, I want to hand it over to Catherine Kramer-Dale from Maryland DHCD, and she is going to tell you all about Maryland Mortgage Program products. And these are just for Maryland residents, and they're pretty cool. Now, Catherine, Darnell told on his daughter, Amy told on her brother. Do you have any family members that you would like to tell on or use as examples tonight?
Not tonight. No, I do have a 29-year-old daughter who's renting, who I'm trying to get her and her fiance to think about purchasing. So it is definitely a goal. So we are starting now. So yes. My name is Catherine Kramer Dale. I'm with the State of Maryland Department of Housing. And always think of the state Department of Housing for any housing needs that you need. It's not just about the Maryland Mortgage Program that helps you with down payment and closing costs. When you live in the state of Maryland, our state agencies, there's so many different state agencies, definitely feel comfortable referring if you currently own a home and you need to make repairs to your home, or if you need to modify your home based off healthcare needs. Currently, right now, I'm even just going to throw this out here. If somebody has been adversely affected by the pandemic and they are in jeopardy of losing their home and their income has affected it, obviously, because of the pandemic, we have a program at the State of Maryland Department of Housing called HAF, Housing Assistance Fund. And the state of Maryland will help pay people who are behind on their taxes, their homeowners association dues, and their mortgage payments. We also have a rental assistance program as well that is funded through HUD, and that is also for rental assistance. So if you have somebody who's been affected by the pandemic and they are in jeopardy of being removed from their rental, reach out to the State of Maryland Department of Housing in reference to our rental assistance program. We don't want anyone to be displaced. So we try to not only provide new housing options through the Maryland Mortgage Program, but we also want to provide options for people to stay in their home if it is in fact affordable. Now I'm going to share my screen and I'm going to briefly go over, because I know our time is limited, but I'm going to go over the Maryland Mortgage Program. This is our website. It's www.mmp.maryland.gov. And when you're on this website, anybody can get on here. Now, the true purpose of the website is for our lenders. And I'm so happy that Amy was able to attend. She really was multitasking because she was having a huge open house in her office for all the agents that are up there and her staff. So I want to thank her very much. And Amy is a top producing loan officer in the state of Maryland, and Direct Home Loans is also a top performing lender. So I'm glad that she was able to attend. Now, this website is for agents and even home buyers. So those of you that are on the call, I'm going to show you how to get in here. When you're on our website, you're going to go all the way over to Professional Portal. And you're going to scroll down and you're going to pass this yellow box and you're going to see a man with a pair of glasses. And when you come into program information, this is kind of like the one-stop shop. Everything that a loan officer, a lender would need is right in here. But these are also tools that agents can use and even prospective home buyers. I'm going to go over the rate sheet. And I'm going to show you all the amazing programs that we have at the State of Maryland Department of Housing to help you purchase your home. Now, everyone thinks that when you apply for the Maryland Mortgage Program, that you have to be a first-time home buyer in order to get a good rate or any down payment assistance. Also, everyone thinks that, oh, I make too much money. I don't qualify for this state-funded program. Nope, that's not the case either. We have 6 guidelines. You have to be a first-time home buyer. I'll explain to you how you are, but you don't have to be one as well. We have household income limits. I'll show you the income limit chart so that you'll see maybe you don't make too much money to qualify. We have home buyer education requirements. As Amy mentioned, we want everyone to be educated on all of the home buying, and even Darnell mentioned like PITI and mortgage insurance. So we require all borrowers to take home buyer education. It can be done in a classroom setting or it can be done virtually. We also have asset guidelines. Hey, if you have a lot of money saved, why are you coming to the state to borrow money? So our asset guidelines are that you can't have more than 20% of the sales price of liquid assets. Obviously, the majority of the borrowers that come to us are people who don't have a lot of assets saved because we're providing that down payment assistance. And you've heard DTI and credit score from both of the guests this evening. DTI, which is debt to income ratio, is at a 45. And the credit score, as Amy even mentioned, we want you to be at 640 or higher. So if you've basically asked yourself those 6 questions, and when you reach out to one of our approved lenders, which obviously you've got a top lender on the call right now with Amy, she'll know, okay, right off the bat, you meet the 6 guidelines. If you're not a first-time home buyer, they're called the flex products. And you can do a loan with us where you get no assistance because maybe you don't need any. Like Amy mentioned, you might get enough seller contribution. Or you might also, as Amy mentioned, get money from any other city or county programs. And maybe you don't need any money from us, but you want a lower rate. Or you could get money from other programs as well, but you also might get $6,000 from us. And here are the rates for Fannie, Freddie, conventional. Government is FHA, VA, and USDA. Or you could get 3% of the total first mortgage, round down, no change, that would also provide you down payment and closing costs. Well, if you are a first-time home buyer, that's somebody who's never owned a home or maybe haven't been on a deed in the last 3 years. Or if you're a veteran using your VA entitlement, the exemption with us for the first time, we would consider you to be a first-time home buyer. Or there's another option. It's the last option. It's called purchasing a property in a targeted area. And the lender, Amy, will certainly help you determine if the property you're purchasing is in a targeted area, then you are automatically considered a first-time home buyer. Targeted areas are where the state of Maryland Department of Planning and the state of Maryland Department of Housing want people to move into these communities to help revitalize these areas. They're not bad areas. I'm just saying that they're zoned as being targeted because we want to help promote homeownership. The first time advantage, $6,000, again, is for a first-time home buyer, as well as meeting all those guidelines I mentioned. And that's $6,000 that you get to use to help you with your down payment and or closing costs. And again, as Amy mentioned, you can always get seller help. You can always get money from us, and you can get money from the city or county programs. And you could even get a gift. You never know. There's the 3%, there's 4%, there's 5%, and there's 6%. Now, I don't have enough time to go into great detail, but the lenders, as well as Amy, knows about all of these different products, and they are going to make sure that you meet those 6 eligibility guidelines. They're going to figure out what side of the rate sheet you're on. Are you a first-time home buyer or not? And do you need down payment assistance or not? And which down payment is going to be the bang for the buck for you? What's going to give you the most amount of money? Now, I will tell you, all down payment assistance that you get from the state of Maryland is not free. It's not a grant. It's not forgiven. You have to pay it back when you sell or refi. You don't have an interest rate on it. These rates are for your first mortgage. And you don't have to make any monthly payments on it. But when you sell or refinance your house, you have to pay off the first mortgage, and you also have to pay off the down payment assistance that you borrowed from us at no interest, no monthly payments. But you don't pay it back until you sell or refi. We have some specialty products that are available in Montgomery County. Montgomery County rolled out a product where if you work for a particular county agency in Montgomery County, they are certain departments that are listed, and we give you a name of a gentleman that can verify that you are in that county office in Montgomery County. And if you're purchasing a home in Montgomery County, this is the rate for the first mortgage. And guess what? The down payment and closing cost assistance is $25,000. Woo! That's a lot of money. It's not any of these. It's for somebody always in Montgomery County, and they work for a particular Montgomery County government agency, and they get $25,000 in a down payment assistance that they have to pay back when they sell or refi. But that's a good chunk of money to help you buy a home. Greenbelt, Maryland, they are offering an amazing program. Greenbelt is for a borrower who meets all of our 6 guidelines that I just went over with you, and they want to purchase a home in the city of Greenbelt. That zip code is specifically 20770, but you have to be currently renting in the city of Greenbelt for the last 12 consecutive months. And if you are, then they will give you free money, FREE. That down payment and closing cost assistance that you're getting is not something you have to pay back. This Greenbelt Home Advantage product is giving you $15,000 of free money. And when you sell or refinance your house, you don't have to pay it back ever, ever, ever. You're not required to stay in these programs for any designated amount of time. So it's not like, oh, if I stay in the house for a couple years after I sell or refi, it's free money. No, you got to pay this down payment assistance back for any of these I've just gone over. Well, we have a really amazing program if any homeowners are on the call and they have student loan debt. Well, we have a program called the Maryland Smart Buy. The guidelines are a little bit different because the credit score is 720, and Amy or any lender will go over that with you. But it provides you an opportunity to purchase a home, and you could get no down payment. We'll help you pay off your student loan debt. Or you could get $6,000 and we'll help you pay off your student loan debt. Or you could get 4% and we'll help you pay off your student loan debt. Or you could get 6% and we'll help you pay off your student loan debt. Whoever you choose, let's say you have two borrowers, John and Tabitha. If John has $40,000 of student loan debt, we will help John pay off his student loan debt. It's 15% of the purchase price up to a maximum of $50,000. Well, perfect. John only owes 40. So guess what? We're paying off his student loan debt. He doesn't own any student loan debts anymore. We've paid it off. We put it in an unsecured promissory note. We don't charge him any interest. He doesn't have to make any payments. This product called the Maryland Smart Buy, you have to stay in it for 5 years. If you stay in the Maryland Smart Buy for 5 years, that unsecured promissory note that we paid off your student loan debt for is poof, forgiven. It's gone. We forgave it. If you did decide to sell or refinance before the 5 years is up, that unsecured promissory note for the student loan debt does have to be paid back, and it is paid 20% each year over the 5 years. So even if you stayed in it for 3 years and on the 4th year you decided that you wanted to sell or refinance your house, you'd have to pay back 20% for the balance for the 4th year and 20% for the balance for the 5th year. If you did pick his wife, Tabitha, who owed $70,000 of student loan debt, here's the catch. If we're only paying off 15% of the purchase price up to the maximum of $50,000, Tabitha owes 70. So we would pay off the max, but then Tabitha has to either come to closing with proof that she's paid off the excess, or it has to be paid off at closing. Whoever you pick in the loan transaction, when they walk away from the closing table, they cannot have any student loan debt remaining. It's a great product, and the lender will make sure it's fitting the right need. The last product we have is called our Home Ability product. It is a program that is designed for somebody who meets our 6 guidelines, and they are for individuals that are disabled or caring for a disabled individual. So again, this seminar ends at 7:30, and I went a little bit over, but I wanted to make sure I at least explain to you how you qualify. There's only 6 guidelines, and as Amy said, it's easy. And the lender, Amy from Direct Mortgage Loans, will then determine what side of the rate sheet you fall on, that you meet the 6 guidelines, and they're going to pick a product that they think is the most beneficial to you to help you achieve the American dream of owning a home. The state of Maryland Department of Housing is here to help promote purchasing homes in the state. We offer all of these down payment and closing cost assistance programs, and we want to make sure that you are going through a lender. I teach trainings all day and every day to all of the lenders to make sure that they're comfortable. And yes, Amy did say the average loan application takes 45, and I'm going to be honest, sometimes 60 days, but let's just say 45 days. Amy at Direct Mortgage Loans can do it in 25. Some can do it in 30, some can do it in 45. It does depend on you. If you're ready to make this move, as Amy said, apply. Meet with her team. They're amazing. Even though they're located in Frederick, they can service you anywhere in the state of Maryland. And make the application, see where you fall into place so that you can go out and look for a home that you are pre-qualified for and that you know that you can afford and that you like. And Amy's going to do all the rest with her team to make sure it's an easy transition. Anybody can come on this website. As I mentioned, it is www.mmp.maryland.gov. And I want to thank you very much for your time and have a great evening and good luck on shopping for your home.
Catherine, thank you so much for that wonderful information. Can you believe that there's a loan product out there that will pay off your student loan debt? People are usually blown away by that. Catherine, I had two quick questions for you, and I hope that you can answer those. The first is about Baltimore being a target zone and all zip codes being included.
So Baltimore County has some areas that are targeted and some areas that are not. But there are some areas in throughout the entire state, like Montgomery County, there are some areas that are targeted, there are some areas are not. Baltimore City is all targeted. And with the Maryland Mortgage Program, you have to use this as your primary residence. You cannot own or have any interest in any property anywhere in the world at the time of this closing. And we do that because we want to make sure you don't own anything anywhere else so that you don't end up living there and using our money with our program to use it as an investment property. So if you don't own anything anywhere in the world and you meet our 6 guidelines, if you're buying in an area that's targeted, oh, hands down, you're a first-time home buyer. I will also mention too, you don't have to be a US citizen. So you do have to have a valid Social Security number and you do have to be eligible to work in the United States, but you don't have to be a US citizen.
Fantastic. And then one final question from a DC resident. Thanks for joining us in DC tonight. But if you're a DC resident looking to buy in Maryland, do you qualify for these programs?
Yeah. Yeah, it doesn't matter where you work. You just have to want to live in Maryland and qualify.
Sounds pretty easy. All right. Well, listen, everyone, thank you so much for being here with us this evening. We've provided you with a lot of information, and we'll actually be following up with you by email with a recording of tonight's event, and then also our presenter slides so that you have their contact information. You can review what they presented and you can contact them if you have further questions. But for myself, for Darnell Davis, Amy Wolf, Catherine Kramer-Dale, thank you so much for joining us. We hope to see you at the Welcome Home Showcase on June 17th, and we hope that you will visit MarylandHomeownership.com. Best of luck to all of you on your home ownership journey. We can't wait to see you get those keys in your hands. So thank you so much. Have a great rest of the week. And thank you. Bye-bye.
Thank you, everyone. Our next Home Buying Keys webinar is on July 13th. So if you need another refresher, join us then, or feel free to share this with anybody who might be purchasing a home in the near future. We wish you all the success and have a good evening.